Today, that mortgage, do you realise how much you can save? Hello again, it's Martin North from Digital Finance Analytics Workless Post, covering finance and property news with a distinctively Australian flavour. Now, over recent times, I've been talking about what I call the apathy tax, which is where effectively people have mortgages where they're paying more than they potentially need. And I want to take that conversation further today. I want to introduce to you Pete Steele. Hi, Pete.
Hey, Martin.
Great to have you with us. Now, let's just introduce you first. So you've got this really interesting proposition.
Yeah, so I've founded a company called and a platform, TrueSavings.com, and we've got a wonderful team who are really passionate about saving customers money on their home loan. And it's a massive opportunity. It's a massive way to help put bank profits back into the pockets of hardworking Australian families. And so we're using our digital and data and tech knowledge to really make a difference to millions of families.
Yeah, that's great. And of course, you've got a bit of background there. You've been working with the big banks previously before you come in. And basically, you and I both share a bit of a sense of frustration, right? That there is an opportunity out there, particularly in the current environment where people are actually under financial pressure, right? And yet there's so much apathy attached to not thinking about the mortgage rate and not understanding what the potential opportunity is if you actually go for the better rate that's just out there. You know, it's like money for old rope if you did but see it.
Yeah, well, as you say, I was very fortunate to work for one of the largest bank, Commonwealth Bank of Australia, and I looked after all the digital and the apps and the websites. And the banks are really important, and they do wonderful work across Australia for families and businesses. But while I was there, I increasingly had an itch that there's a lot of customers who are very loyal, and as you say, they just set and forget their home loans, and banks manage to make enormous profits off those customers. And so I certainly thought there's got to be something better we can do to help. And it is somewhat illogical. Our most expensive products in our lives, why do we let them sit there? And, we're certainly so focused on cups of coffee and also then petrol, the price of petrol. But the cost of your home loan is 100 times all those things. But we tend to just set and forget, and as a result end up paying too much. So we certainly want to change the dynamic there.
And there's a couple of observations. I see it in my surveys too, right? So people spend a lot more time on comparison sites, think about buying a new car or a new fridge rather to the home loan, right? But the point, secondly, is that it's seen as a bit complicated and difficult to do. And I think the process, although it's simpler than it once was, for many people, it just is really intimidating.
Yeah, we did a lot of customer research to try and understand what's going on, the psychology and perception versus reality of what's difficult. And we found there's a few things. Firstly, it is quite difficult to understand what different home loan products that meet your needs, what they're all priced at. The whole industry works on published prices and discounting and lots of tricky product terms and features. And so one of the first things we did was use our data skills to take all that pricing and bring transparency and put it into a really simple experience. As you do see with other industries, airlines, flights, the stock market, it's very easy to get a very simple price for what you need. And so we brought that idea and mindset. And I think that definitely demystifies a lot because they are quite intimidating home loan products. And I think the second thing that we observed is taking action. There's still perceptions that it's a lot of work. It's going to take 6 weeks to actually switch providers to get a better deal. And yes, there's definitely a lot of paperwork and all requirements for the lenders to see certain proof points. But actually, it's moving along very quickly, and we've invested a lot of time and capability there to make that enormously easier for customers as well. It's down to about 45 minutes of investment for a customer in time to get through even a complicated loan scenario. So it's certainly, if you think about the value at stake, it's a pretty good investment of 45 minutes.
Absolutely. And it's worth just underscoring that if you start looking at the data, people can save thousands and thousands of dollars, potentially, depending on what rate they're on, depending on switching costs and those sorts of things. Also, depending on when they last took the loan out, right? Because more recent loans tend to be the ones that are actually closer to the best rates, whereas a lot of historically older loans tend to be the ones that are sitting on much higher rates.
Yeah, that's right. And with the wonderful data that you see, you certainly have great insights as well. We actually see some customers being out of the market significantly 12 to 18 months after they've taken a home loan out. Whether that's a function of how they took out the first home loan or the market moved, or to be honest, banks are fairly good at managing the price for customers who are on a back book and the interest rates once they're being acquired as a customer. So it can happen quite quickly. But you're right, a 3 to 4 year life of a loan, by that point, customers are significantly out of the market. And certainly we've got a national average that we look at about $5,000 per annum saving if you reprice your loan. We see examples. We saw one example as high as $17,000 a year, and some examples are in the $2,000. I think the main observation I've got is it's such a healthy thing just to look and check. And then you can make a decision to say, well, is it worth making the effort? Is it worth the effort to go after this saving, which, as you say, gets bigger and bigger every year?
Yes, and I guess it's also worth highlighting that there are some distinctions between fixed rates and variable rates, right? Most Australians are still on a variable rate, which means essentially, you can move relatively unencumbered. Some fixed rates, of course, have lockouts and all those sorts of things. So there's stuff to think about if you're on a fixed rate versus a variable rate loan.
Yeah, definitely. And it depends if it's been rising or lowering interest rate environment for the fixed rates. There's specials and things. And so one of the things we do is try to quite quickly help a customer understand the break fees and what's involved. It's always worth interrogating. We've found about half the time it's worth, even for a fixed loan, a customer taking action, and half the time it's not. But usually they focus on the fixed loan, but they'll find the variable is well out of market as well. So it's again, I think about an annual health check. Just it's always worth a look, and there's usually significant savings for most families.
Absolutely. Now there's a couple of questions that come quite often, which is, well, if I start going through this process and comparing loans on a more regular basis, does it impact my credit rating?
Yeah, it can definitely be done in a way that it doesn't. So the way inquiries are done nowadays, there's a definite distinction between those that impact the footprint that you have at the credit bureaus or your credit rating, and lightweight inquiries that don't. And so it's a usually, I think, a no regrets small investment of time to have a look at what you can save.
The reason I'm asking that is that I've heard people approach their bank and the bank says, oh no, you shouldn't do that, because if you do, then it will actually damage your credit rating, right? Let's just be very clear. Making an inquiry about looking at alternatives is not going to have an impact directly on the credit rating.
Yeah, exactly right. And look, banks are wonderful, but we've also got to remember these are the same banks that systematically year after year will find ways to increase the price of the loan and the margin that they make on loyal customers. And so I'm a big fan of the major banks having an open mindset to say it's no regrets to look at options. Yes, loyalty to an institution that's done the right thing by you, great. But when it comes to having a mindset around this is a market product, at the end of the day, it's an expensive loan, and you've got a right to, with no regrets and no impact, consider options.
And I guess the other interesting question is that, we're talking here about the mortgage, which is the biggest loan that people have. But are you thinking that you might ultimately extend this sort of thinking into other loans too?
There's a few different ways we could go into other loans, small business loans. There's a lot of opportunity, I think, to help small business customers with both getting access to credit more easily, reducing a lot of the friction and waste that goes on in that process. Again, the pricing, there's a lot of high margin in that businesses have to pay. So I think there's a big opportunity there. Also, per our vision, which is all about helping Australian families save a lot of money every year, we also think about other products as well, other banking products, and just helping superannuation. There's big opportunity to use data and digital to help customers. We don't manufacture the products, but give them transparency and control. And, it's a pretty exciting mission for the team, but we want to get mortgages right. And we're moving quickly, but I think there's a lot of opportunity both for owner-occupied and investor mortgages in the short term. And then we want to help other ways.
And has the changes to data flows and open banking helped and facilitated this process, or were you already on the journey before that happened?
I wish it had helped more. So open banking is really important. It's, I'd say, a start, but the current execution's problematic. And I think that's well understood and documented across the industry. So there's some good people who are both in government, industry, disruptors who are putting effort into defining a bunch of improvements to open banking that should make things a lot easier for customers to be in control and for them to choose who has access to their data in a safe way. So I'm very supportive of those improvements. At the moment, open banking is the vision, but it hasn't helped us just because it's not in the ready stage yet. But I'd say next calendar year, it almost certainly will be a big catalyst to make things easier.
Well, certainly I've got the perspective that in theory it should be highly beneficial to customers. But at the moment, the way it's implemented and the fragmented mechanisms that we've got means you're not getting the full benefits yet. But I guess it will take a little bit of time. So as we sort of come to the end of our conversation, there's 2 points to re-emphasize, isn't it? One is there should be a note in your diary every 6 months or every year to say, check, just to make sure that you've got the best possible rate that you can get on the mortgage, right?
Yeah, exactly.
And secondly, there are tools around, such as what you're offering, and we'll put the links and things below to help that process. And it's also worth just recognizing that if you find out that there's a really good loan down the road, you can also pick up the phone and talk about to your existing lender and say, I could go down the road and get this. So it gives you an extra negotiation point too.
Yeah, so we're big fans of the customer winning. So if it's switching to a better deal or renegotiating with their existing lender, no problem. We want best customer outcome. So what we do is I'd encourage everyone to go to truesavings.com. And the first part there is it takes less than 60 seconds. It's more like 30 seconds. And we wanted it to be as quick as pricing a return flight Sydney to Melbourne. That easy to say, what am I paying? What should I be paying? Wow, look at the savings. So that's been testing really well. It's really simple. It should be done. Everyone should do that every 6 months, like you say. And there's a lot of saving to be had there. And then we've invested in some video whiteboard engagement technology that we've built so that we found people still want to talk to people and experts. It's an intimidating product and industry. And so we're bringing experts into the browser to help accredited mortgage brokers to help customers, again, who are motivated to help you refinance or to renegotiate if you want to, and just reduce all that friction so it's in the moment, a really breakout experience. And from there, we can make everything easier by using data in that experience and make it a lot easier than ever before. So it starts with that being alert and aware of what you're paying and what you could pay. And so exactly like you say, once or twice a year, that health check on your home loan and then hopefully start saving.
Well, Peter, I appreciate your time today. The apathy tax is alive and well in Australia. This is a way of addressing it in the current environment where people's finances are under pressure. This is actually a very simple and straightforward way to save a bit of money in the process, right? And, really should be no
Save a lot of money.
Well, absolutely. In the scheme of things, absolutely right. And of course, it's not just 1 year, but for every year that you have a better rate, then accumulatively it actually adds up to a really, really big number. And if you think about it over the lifetime of the loan, it's thousands and thousands and thousands, isn't it?
Yeah, we look at the averages there, and by taking action regularly every 2 years, say, you can save well over $50,000 over the life of the loan. So. And who doesn't want the national average we see saving opportunities $5,000. It's above $7,000 in Sydney and Melbourne. So every year that's pretty good savings. So I could certainly enjoy that money right now.
Absolutely right. And just to repeat the link that people should go to.
Yeah, truesavings.com, and hopefully you'll have a great experience on that.
Terrific. Well, thank you very much for your time today. We'll put the links below, and hopefully we'll tic-tac down the track and see how it's going and see how many people are saving money.
Yeah, good. Love to. All right. Thanks, Martin.
Thanks. Cheers. Bye.